SPAC to return remaining $533 million raise for Trump social media deal. Reuters. New York, Reuters, Digital World Acquisition Corp., the SPAC that plans to merge with former U.S. President Donald Trump's media and technology company, said this week it would return to investors $533 million raised for the deal, after some have already backtracked on $467 million of commitments. The development means the end of the so-called private investment in public equity PIPE transaction that would have delivered Trump Media and Technology Group, TMTG, the operator of Trump's Truth Social platform, $1 billion as part of its merger with Digital World. A SPAC, Special Purpose Acquisition Company, or blank check firm, is a publicly listed shell company that raises funds to merge with a private company. Below are your comments. I find it shocking that people who have amassed fortunes still continue to give money to Trump. He has such a long history of business failures. Previously, when he was president, he could do them favors. Now that his criminal operations have been fully exposed for fraudulent activities, he circa. You would think these millionaires know a bad investment when they see one. Especially when that investment is about to be sentenced to prison for bank fraud and tax fraud. How much clearer of a picture do they need? Donald Trump can just put his name up as collateral. He keeps saying his name is worth $3 billion, maybe $4, maybe $6 or $8 billion. Just send his financial statements. His assets are worth a lot, including the 80 projects he plans to build in the next 10 years. Just put a number on them, he's good for it. He pays E. Let's see. Digital World stock has plummeted from $97 per share down to $15 per share today. It's totally amazing what the name Trump can do for an investment. The only positive thing is that 99% of investors are MAGA Republicans. I'm sure Trump will appeal to his MAGA base to donate to a fund, small print saying it will be used for continuing operations of Truth Social. Then the dollar will mostly go to whatever salary Trump decides he deserves for his brand. Next news. Court documents expose Trump actually knew his Manhattan penthouse was only a fraction of the 30,000 square feet he claimed. CFO says size was too trivial to be concerned considering Trump's $5 billion to $6 billion net worth. Benzinga. Former President Donald Trump has been embroiled in numerous controversies over the years. One of the more intriguing allegations recently brought to light concerns the size of his penthouse at Trump Tower in New York. New York Attorney General Letitia James has put forth several allegations against Trump, accusing him of misleading information to inflate the value of his assets for better financial benefits. Among these, a particularly interesting one revolves around the size of his Trump Tower. Below are your comments. Considering that defendant Trump has claimed in his financial statements that his penthouse is worth $496 million, which is a couple of $100 million more than any apartment has ever sold for in New York City, and is about 10% of $5 billion. It seems as. Here's how and why false statements on loan papers is a problem. Most banks are publicly traded, meaning investors rely on accuracy of the bank's filings. If people are found to be fraudulently inflating the value of collateral, it hurts the company even if in the long run the loans all get paid. INV. To trivial in the $5 to $6 billion scheme. So they valued everything at 3 times actual value. So it was really only worth $1 to $2 billion, but they leveraged $4 billion on $1 to $2 billion in total assets. Come on people, it was winter when the appraisers measured Trump's penthouse. The Donald was experiencing shrinkage that cold and rainy day. To say inflating a property under 11K square ft to 30K square ft isn't a big deal given the owner's net worth is ridiculous. So you're saying it's okay to commit fraud because you're rich? Meanwhile, if I were to triple the size of my house on paper before attempting to get a bank loan, I am going to be in big. Next news. U.S. electric vehicle sales hit record high, Tesla loses market share, report. Reuters. Tesla now dominates just half of the market, down from the 62% it held in the first quarter, despite a price war started by the Elon Musk-led company to solidify its foothold in the competitive EV arena. However, the company could reverse the downward trend with the launch of its Cybertruck electric pick-up truck, which is set to be delivered to customers in the current quarter, the market research firm said. Higher inventory levels, more product availability, and downward pricing pressure have helped spur continued linear growth of EV sales in the U.S. market, Cox said. Below are your comments. Market share is meaningful when comparing Coke to Pepsi. It is meaningless in the EV market as the first to market, a desirable place to be, starts with 100% of the market, and share can only go down even if it has sustained 50% YOY growth from 2020 like Tesla has. Most Econ 101 students could have told you this would happen. As more real car makers get into the market, the competition will increase and Tesla will get squeezed. Like any other manufacturer that is pioneering an effort. The real story will be whether or not Tesla can control its spiraling qual. Tesla will continue to lose market share, it only makes sense. But 50% of 300,000 is better than 62% of 150,000. They are the leader and will continue to flourish for a long time to come. Tesla's market share goes directly to the buyers while much of the competition's market share goes to dealers as it sits on their lots, still waiting for buyers. Keep in mind that Tesla spends close to $0 on advertising while the competition spends billions. These writers get no money, father. Tesla was always going to be competing in an ever-increasingly competitive EV market. This is no surprise, but Tesla maintains its myriad advantages and therefore will have the most significant share of a larger EV market. Next news. Americans failed to pay a record $688 billion in taxes. The IRS says that will change. The Wall Street Journal. Audits and other enforcement will be stepped up to reduce the gap, the Internal Revenue Service said Thursday. The IRS said there has also been a shift from wage income, for which taxes are withheld, to gig economy jobs, for which there is a lower degree of compliance. Taxpayers' overall compliance rate is projected to stay relatively steady at 86.3% for tax year 2021, after audits and other enforcement actions. Below are your comments. Are they going to use the lowest learner hit list as a starting point, or will it be an updated one with more political targets? That's the list that was backed up and lost when the first hard drive was destroyed by IRS while stonewalling. The fact is that Werfel and the IRS have absolutely no clue how much money in taxes due is not paid. It is all a wild guess fudged upward to justify the huge increase in the IRS budget over the next decade. The CBO did not agree with the huge estimates of additional income projected by the administration. Schedule C undeclared business income is going to include anyone that sold $600 or more online through a retailer, or heaven forbid sold something privately for over $600 and took a check to the bank, which they are required to report. Like I have been saying all along, the IRS did not need 80,000 new ag. You want to increase revenues and ensure everyone pays their fair share? Eliminate all deductions and charge the same flat tax rate to everyone. No more loopholes. As citizens, we all have a responsibility to support the government. By paying the same rate on all income, that obligation is covered. Who audits the government when it spends $33.4 trillion beyond its means? Next news. Ford says it is at the limit with UAW contract offer. Reuters. A senior Ford executive said Thursday the automaker is at the limit of what it can spend on higher wages and benefits for the United Auto Workers, and warned the union's strike at the company's most profitable factory could harm workers and slash profits. We have been very clear that we are at the limit, Kumar Gahotra, head of Ford's combustion vehicle unit, said during a conference call Thursday. Ford is open to reallocating money within its current offer in further bargaining with the union to secure an agreement, Gahotra said. Below are your comments. The Big Three should just bite the bullet and wait the unions out. Set up for long-term shareholder value by moving more and more to a non-union workforce, so they can continue to compete with Tesla, etc., who do not have a union workforce. Otherwise, the unions will slowly bleed out the Big Three and automakers have more than doubled initial wage hike offers, agreed to raise wages along with inflation on and improved pay for temporary workers, but the union wants higher wages still, the abolishment of FA two-tier wage system and the expansion of unions to battery plants. Automakers have offered a no. Ford and others are already looking at the Tesla style of doing things. Testing out giant gigapress for one. More automation is coming and this is going to push it really fast. Many of these jobs will go away. How many of these workers would take the current deal? I say offer it up to Indiva. These companies are sitting on a few months of inventory. They can afford to shut down a plant. Also, the assembly plants in Mexico are not affected. It's a little more complex than it appears. Next news. Insiders are betting millions on these two stocks. Here's why you might want to follow their lead. Tip ranks. When stock markets are in flux, it's time to dig a little deeper to find the right investments. Investors will look for all sorts of signs, based on the earnings forecasts or charts, but one of the clearest signs of all is put up by corporate insiders. These are the company officers who are charged with ensuring profits and returns. They are answerable to boards of directors and to shareholders, who expect them to build a company that supports a solid share value. These insiders, the C-suite Below are your comments. Another pump and dump? Looks like it. I'm staying diversified using the dynamic model portfolio system, which has netted out some impressive returns over the last 4 months. Also retaining consumer staples and medical stocks with alluring dividends. These prudent and resilient stocks are poised to. Want to make money in the stock market? Just invest in the S&P 500 and be patient. Want to lose money in the stock market? Just listen to these guys. If you buy a stock based on a story you read, you have already likely lost. The stories don't come out until the initial run-up amongst insiders starts to wane. Then they flood the market with stories to get others to buy in and bam. They take their profits and run. Insiders are betting millions on these two stocks. Here's why you might want to follow their lead. Because you are a pump and dump bleeper. Next news. Dreams of big bond gains backfire with $10 billion ETF loss. Bloomberg. All year, Wall Street pros have been sinking record sums of cash into the world's largest treasure. ETF in a high conviction bet that interest rates have peaked. All year they've been wrong, with an estimated $10 billion loss. Yet that's not stopping a cohort of dip buyers braving the worst market drawdown in decades. Most Ray D. from Bloomberg. Israel latest. UN staff give an evacuation order for northern Gaza. Top House Republican wants help from Democrats to ICA Speaker Scalise ends H. Below are your comments. A generation of money managers who think 5% is high. The tax loss selling hasn't even started yet. Bond is only for institutions and big funds. For regular people with $1 to $2 million asset, it is better to buy 1-year CD with 5% interest. RCD ladder in Fidelity account. CD from bank has $250,000 FDIC insurance. Yeah, I thought high bond rates were going to crash the economy too. It is currently a hedge to pare losses if stocks lose ground. Please wait a moment. These days, dumb money is the 90% of funds that think they can beat VU, SPY, IVV over the 10-year after fees. Smart money are the people that own these funds and put zero effort into it. The Fed has not raised rates since they did back in July. And since then all that inflation has done is go up. What does common sense tell you? It tells me that when you take the Republican approach and do nothing, things only get worse. Next news. The Social Security raise for 2024 just got bigger. Barron's.com. Consumer prices climbed 3.7% year-over-year in September, according to data released Thursday by the Bureau of Labor Statistics. The COLA calculation is based on a subset of the headline consumer price index called the Consumer Price Index for urban wage earners and clerical workers, CPIW, which rose 3.6% over the past 12 months. The calculation compares the average consumer price index from the third quarter of 2023 in the Avenue Wage data from the same period last year. Below are your comments. Bear is absolutely correct, at least a 15% increase. Bills have all gone up considerably, including taxes and utilities. My Medicare supplemental more than doubled for 2024. Some food costs have gone up 20 to 30%, and I won't mention fuel. That is good to hear, as I have already been notified by United Healthcare that my secondary health care coverage is being increased by approximately $30 a month. It was increased by that amount a LSO last year. So it is another win-lose deal. I guess stagnate is the word. From Google. Social Security is not an entitlement, it is the insurance that Americans pay for through the Federal Insurance Contribution Act, FICA, with every paycheck. It is exactly what it says, an insurance contribution that we pay into. Why not discontinue the federal tax on Social Security benefits? That would be a far larger increase for the recipient. Next news. Early believer in Tesla and Nvidia, Cathie Wood and her firm changed modern investing. Just what do ARK Invest offer? Benzinga. As head of ARK Invest, Cathie Wood is one of the few celebrities in the financial world. She has solidified her status as a trailblazer in Oracle in her near-decade leading ARK. Wood and her firm have become synonymous with forward-thinking investing, focusing on disruptive, changing technologies. And she is not afraid to take positions in risky companies. She bought stock in Tesla Inc., NASDAQ, TSLA, and Nvidia Corporation, NASDAQ, NVDA, in 2016. Wood has big ideas and makes splashy product. Below are your comments. I began my investment journey at the age of 33, primarily through hard work and dedication. Now at the age of 38, I am thrilled to share that my passive income exceeded $100,000 in a single month. For the first time. This success reinforces the importance of the advice mentioned earlier and also the December of 2017 is when her flagship fund was last at its current price. What is she known for? Soul-crushing fees and long-term loss. She is right on everything but Bitcoin. It will go to zero. She changed modern investing by demonstrating her ARK long-term return is not beating S&P. Buy high, sell low is her motto. Next news. Top economist Mohamed El-Erian warns markets got drunk on support from central bank beefs and now he's more comfortable keeping his fortune in cash. Fortune. Mohamed El-Erian, chief economic advisor at Allianz and former PIMCO CEO, says the Fed and Bank of England's high rates bodes well for savers. Below are your comments. El-Erian said he believes the road to get inflation under control has its toughest time ahead. I agree. And the main culprit is irresponsible deficit spending, which I see little hope of being corrected. Democrats will not agree to needed cuts in spending, witness the resistance even to long-ove. Welcome back to the 70s. The Fed may eventually engineer a recession, which will take inflation down to about 0% or 2%, but the ensuing recovery? We'll be back to 4% inflation in 12 to 24 months, unless we are at 5%. And the debt will balloon to about $35 plus trillion. But 2,400 years of econom. Rest assured, the Fed will eventually break something, just give them time. Zero chance the Fed can ever get back to their target level of 2% inflation. Evil clowns in Washington need unlimited money printing to continue their pet projects and money-low. Enduring operations through never-ending wars. Next news. Qualcomm cuts jobs in California in effort to reduce costs. Bloomberg. Qualcomm Inc., the largest maker of chips that run smartphones, is reducing its workforce to cope with lackluster demand for its main product. Most read from Bloomberg Israel latest. UN staff give an evacuation order for northern Gaza. Top House Republican wants help from Democrats to pick a Speaker. Scalise ends House Speaker bid, deepening Republican turmoil. Israel latest. Hamas leaders targeted as ground war looms. Video game Cyberpunk 2077 uses AI to replace deceased Voic actor. The comp. Below are your comments. Qualcomm will need to cut more than jobs if U.S. continues with this trade war and sanction on semiconductors, chips. It's a result one of U.S. sanction. More to come. The company could save millions by moving out of California. Qualcomm cut off biggest customer Huawei, who create its own chips now. Sanctions coming back to bite. Our politicians cannot figure out left from right, destroying America with wars on China. Next news. 30-year treasuries had an ugly auction. What's behind the weak demand? Barron's.com. Primary dealers, who buy up supply not taken by other bidders, had to accept 18.2% of the latest ISS-UE of 30-year debt, higher than the 2023 average of 10.72%. Below are your comments. The 30-year yield should be trading at around 10%. I wouldn't lend money to Biden and Yellen either. Expected if the interest rate's going up and 2 years higher than 30 years. So many will do is buy 2 years wait for to get a higher yield on 30 years. Flour at Costco went from 5.99 to 12.99. Where is it in the CPI? Liars. The Treasury should have financed much more of the debt when the 30-year was trading at 1.5% 2 years ago, as it has tripled to almost 5% on its way to 8 or 9%. But we should be fine because Bidenomics is giving us a booming economy, so tax receipts should help us pay the interest on the debt. Next news. Mortgage defaults rise at fastest pace since 2009 as lenders warn of worse to come. The Telegraph. Mortgage defaults have risen at their fastest pace since 2009 as lenders warn over plans to restrict the supply of deals. Below are your comments. All Data Sites is from the UK when this finance site is primarily for US investors. I am a real estate appraiser. 2 of every 10 assignments I get are for default. It's coming here too. There's no mention at all in the article about the main cause of mortgage defaults now. Inflation has caused big monthly payment increases for variable rate mortgages. There's no mention if there's an increase in defaults of fixed rate mortgages, which would indicate a potential major problem where. So where's their relief, Mr. President? Giving it all to the student loan borrowers to reward them for their degrees in pop culture studies? Next news. Powerball streak ends. Here's what the $1.765 billion jackpot winner is pocketing after taxes. Yahoo Personal Finance. Here's how much of the prize you would take home after taxes, plus 5 ways to invest your windfa. LL. Below are your comments. Qualcomm will need to cut more than jobs if US continues with this trade war and sanction on semiconductors, chips. It's a result one of US sanction. More to come. The company could save millions by moving out of California. Qualcomm cut off biggest customer Huawei, who create its own chips now. Sanctions coming back to bite. Our politicians cannot figure out left from right, destroying America with wars on China. Next news. Court hears audio from Caroline Ellison's November 9 all-hands meeting. The Wall Street Journal. Audio clips of Caroline Ellison's November 9 all-hands meeting. https www.wsj.com/live-coverage/sam-bankman-fried-caroline-ellison/card/i-felt-free-to-be-hone St. Ellison says of November 2022 Alameda meeting 6Z3 by 4 IGMI HQHBY2 THD90 were played in court. Below are your comments. Hermann Göring. Hitler told me to do it, I was just following orders. Son of Sam. The dog told me to do it, I was just following orders. Caroline Ellison. Sam told me to do it, I was just following orders. SBF. Mom told me to do it, I was just following his orders. My dog saw this picture and started barking. Next news. AMC CEO Adam Aron gets caught with his naked shorts down. Fox Business. Adam Aron, the CEO of AMC, claims he was the victim of an extortion scheme that likely could have me as a result of some decisions of questionable judgment on his part. Below are your comments. $43 million con man. Fake media said for 100 years, there is no such thing as naked short selling. It's only bad investors blaming for their bad investments. With media like these dishonest, our future no better than Middle East. Not only am I not selling, I'm buying more. AMC is the next money train. Should be doing federal time already. Please subscribe to my channel. And if you like it, please thumbs up.